Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this particular video, which is part 2 of ASC 326, that is expected credit loss method, right? So in this video, I'll be discussing in detail about measurement and valuation and the disclosure requirement as per Accounting Standard Codification 326. So let's dive into to understand more in detail. Started with the ASC 326. We covered like the definition of expected current expected credit loss, and then we discuss about what is in scope, what is not in scope, then transition date, transition methods, objective, and all the four concepts. This we have covered. So now we are jumping into the measurement. So how do you measure the current expected credit loss? So current expected credit loss include reasonable and supportable forecast plus adjustment for current economic condition plus historical loss experience adjustment for asset specific attribute. So what does it mean? So let's understand one by one. The first one is reasonable and supportable forecast. That means you need to forecast. This is current expected credit loss. That means you are doing an expectation of future loss. But what are the basis of those calculation of the future loss is the supporting document in your hand, right? And those supporting document are reasonable or sufficient. That is something first you need to evaluate. Second thing is if there is change in economic condition. For example, today you have taken an external commercial borrowing from United States of America, right? So let's assume you have taken 100,000 external commercial borrowing from the United States of America, and today's exchange rate of US and India is, let's assume, 80 rupees per dollar. So today the amount you have received is how much? 8 million INR? Yes or no? Are you guys with me?
Yes, sir.
You have taken 100,000 loan, 100,000 US dollar loan, and you have received in INR. So value is 8 million INR, right? And this loan, let's assume you have taken for a period of 5 years. And after 5 years, let's assume you need to pay back this $100,000 loan. And in 5 years, let's assume the dollar rate has changed to 120. So how much will be the cash outflow if you consider like other factor constant? There is no interest, nothing else. So you need to pay $120 million or $12 million instead of $8 million because of change in economic condition, because of change in foreign currency rate. Are you guys with me?
Yes, sir.
Right. So those all things, those all factor also you need to consider. You know, like for example, any petroleum company. So petroleum company, if you see, their rates fluctuate based on the ever changing petroleum prices based on their petroleum price index, right? That comes under the economic condition. Make sense?
सर ये
Yes,
रिपीट
sir.
करना लास्ट लाइन बोला आपने
For example, if you are doing like purchases, let's assume you are a petrochemical company and you are making polyethylene and polypropylene, like white plastic basically. So for that,
Okay.
your raw material is natural gas, right?
Right.
Natural gas you import from other country, right?
Right.
And the prices of that is being fixed in the international market,
Okay.
right? And it is dynamic. It's fluctuate like a share market every second,
Mm-hmm.
right?
Correct.
So your prices are dependent on the petroleum price index
Right.
at which you will be booking the purchases,
Correct. Record.
right? That is called adjustment to current economic condition.
Hmm.
Everyone agree? Rahul, Prashant,
Yes, sir.
Santrupti, correct? Third is historical loss experience. For example, with any particular customer, you have experienced some defaults. So that particular customer is a high risk customer for you. In that case of scenario, the estimation for that particular customer expected credit loss must be different than your other customer. So for example, you are in, let's assume you are AT&T, right? Do you know what AT&T do? You have any idea what is AT&T?
No.
Sir, AT&T is US carrier.
Yes, same way how we have Airtel in India. In US, the mobile network provider, broadband service provider is company, the one of the largest company. The name is AT&T. So AT&T provide broadband services. They also provide mobile services, and they also provide landline services. Right. So these are the three services they provide, and they have customer all over the US. In the customer category, there are metro category customer, there are tier 2 category customer, and there are tier 3 category of customer. Right? In the tier 3 category of customer, they see most of the defaults because of the low paying capacity of those individuals. Are you agree with my statement or example?
Yes, sir.
So in that case of scenario, so tier 3 category of customer, generally they have experiences more losses in the past, so they consider more risk in tier 3 category of customer. Hence they need to do the separate estimation of expected credit loss to giving the credit to the customer of tier 3 city. That is called historical loss experience adjustment for asset specific attribute. That's an example. Same way, if you see in the banking industry, bank give loans, right? Generally, bank have seen the startups, almost 90% startups fail. So they feel it very risky to give the loan to the startup. They are more comfortable giving loan to the employees of big company, but they are not very comfortable providing the loan to the small traders or to the employee of small companies. Have any of you experienced such thing, or do you guys have any idea like this is how like banking works?
Yes, sir. Yes.
But what is the reason? Because the credit score is low, and normally in history bank do not have good experience of recovery with such category of customer.
Right.
That is the reason they provide less and less loans to such category of customer, and if they provide loan, then interest rate are comparatively higher. Right? So when you are measuring the estimated current expected credit loss, you need to consider all these three factors for the calculation purpose. The first one is the supporting document you have available. Are those documents are reasonable and sufficient? Second is the dynamic of the economic condition in which your company operate or in which your customers work, right? Third is the historical experience with the respective category of customer. So all those things you need to keep in mind when you are estimating the expected credit loss. Does that make sense? Yes,
Yes.
no?
Yes, sir.
Anyone would
Yes,
like
sir.
to add any example to help everyone?
सर इसके साथ इसका तो मेरे पास एग्जांपल है फनी वाला थोड़ा बैंकिंग का ही. सो बेसिकली जब व्हेन आई वाज इन पीडब्ल्यूसी तो वहां तो मतलब एचडीएफसी वाज लाइक कि भाई तुम्हें क्लासिक कस्टमर बना दिया, यू आर नाउ अ लाइफ टाइम क्लासिक कस्टमर एंड क्योंकि यू आर वर्किंग विद पीडब्ल्यूसी एंड ऑल. सो व्हेन आई चेंज ऑर्गेनाइजेशन टू रिंग सेंट्रल, इंडिया में इट इज वेरी न्यू. ठीक है. So my colleague Rituraj, he went to bank to ask for loan and bank was like ये कौन सी कंपनी है, हम आपको लोन ही नहीं दे रहे. फिर जब सैलरी स्लिप दिखाई महीने की ये दिखाया, तब जाके दे अग्रीड कि हाँ कुछ है, यूएस में लिस्टेड है, तब जाके वो माने। अगर वो नहीं पता तो वो नहीं ट्रीट कर देते लोग ढंग से।
Hmm. Yeah, absolutely true. And like for our company also, we are a startup. So no bank provide loan, even though like everyone on the nation is saying like we should support startup. But when we actually go for any funding support, no one gives no one give damn shit at all. Like everyone asks, give us last 3 year financial statement with the profitability. If you are in a profit, then why do I need loan? Yeah, so that's a mystery.
ये सर इंडिया में ही ऐसा या ग्लोबली ऐसा ही है कि स्टार्टअप्स को नहीं सपोर्ट कर रहे फाइनेंशियल
No,
इंस्टीट्यूशंस?
no, like most of the country do support. Like US is a big believer in startup. That's the reason if you see more than you can say 46% of innovation across the globes happen in US.
USA.
Yeah, so US, Europe, and China also a big believer. They do a lot of support. Like almost 28% of the innovations happen in China in the world.
Okay.
Hmm. And this Korea, South Korea, not North Korea, and Japan, they do a lot of, and Israel, they do like huge support. The highest patent, if you see year over year, is coming from like Korea, Japan, and Israel.
राइट,
Hmm.
इंडिया का ही प्रॉब्लम है।
India is far, far, far below
फिर अभी
in
कुछ
this.
आ तो रहा है, पिछले 4-5 साल से बहुत ज्यादा हो गया है कि स्टार्टअप
Wave has created, like is this Modi government, they have created a startup wave undoubtedly, but still like government department people are not people are still, I can't use that word because it's getting record. So you can understand my emotion.
Yes, yes. I get your
Despite of the fact that I know like many government departments.
अच्छा, okay.
Cool. Okay. So next topic is methods to determine allowance for credit loss. First, here we have discussed what all things you need to consider for the calculation of expected credit loss, but what method you should adopt. And all these are permissible method or allowable method as per ASC 326. First and the foremost or most of the time used method is discounted cash flow method. That is called DCF method. So DCF method is impairment is determined by comparing the assets amortized cost, that is book value, to the present value of the estimated future principal and interest cash flow. So how do you calculate the loss? Present value minus the book value, whatever is the difference is your estimated credit loss. Second method is loss rate method. So loss rate method is impairment is calculated using estimated loss rate and multiplying that rate to the book value at the balance sheet date. So for example, like one example you I think Ayush you have given that 1% or 2% of the receivable we consider as like tentative bad debts. So we create the provision for bad debts, right? But those 1% and 2%, the management come to that conclusion based on the historical adjustment, right? That comes under the loss rate category. The loss rate category is identified the percentage by the management based on the historical facts and data, and you multiply that rate to the value at year end to reach at the loss. Make sense?
Yes, sir.
Third is roll rate method. So roll rate method is expected loss. In the roll rate method, expected loss are projected using historical trend in the credit quality indicator like risk rating, delinquencies, right? If you see like when you and nowadays I think this is very much available in India also about your credit rating, so you can check your credit profile as well. So if you have account on policybazaar.com or like what are the portal for online loans? Can you give me some names like on which you portal you can go and apply for online loans? Like Paisa Bazaar, yeah. Yeah. So Paisa Bazaar, Policy Bazaar. So they also provide you free of cost your credit rating. So you can, like after this class, you can go and check your credit rating. That's available free of cost. So if you see, like the banks give the credit based on those credit rating also, right? That is called roll rate method, in which the qualitative factor has been considered, and one of the qualitative factor is your risk rating. Same way in US, everything is being linked with your social security number. And once you put the social security number, you can see what is your credit score. And what is your credit score? Accordingly, bank will assign how much amount they can give you loan, at what rate of interest they can give you loan. Right? Next is PD and LGD. So PD is basically probability of default, and LGD is loss given default. That's the full form of PD and LGD. So impairment is calculated by multiplying the probability of assets will default within the given time frame by the LGD, which is percentage of assets not expected to be collected due to default. So this is again like percentage method. Last one is method that use aging schedule. If you have seen, like in receivable, generally we use aging, whether it's like trade receivable, account receivable, or maybe like receivable from employees or other receivable. Generally, if you have seen in your experience, the company use aging method, right? So accordingly, whatever the amount is being estimated, which is being long due, so that's how also you can calculate the expected credit loss. So these are certain permissible method as per ASC 326. Any doubt on any
No.
of the method?
Clear.
So you need to consider three things: reasonable and supportable forecast, adjustment to the economic condition, historical loss experience. Then, considering those things in mind and the numbers in front of you, you can apply any of these methods to calculate the expected credit loss. So what all consideration you need to give? Pool of asset with similar characteristics, similar risk characteristic. Do not consider beyond the contractual term. Consider the expected prepayment. If already there is a prepayment, then you should not consider any loss on that because you have already received the money. Fourth is not required to recognize the loss when the risk of non-payment to amortize is already a zero. If risk of loss is already a zero, then you are not required to calculate any estimated credit loss. Last one is beyond a reasonable and supportable forecast period, revert to the historical experience. So those things you need to keep in mind when you are measuring. Now coming to the expected credit loss on financial assets measured at amortized cost. So first thing you need to keep in mind is collective basis, time value of money, and then third is collectability of the financial assets. So collective basis, what all things you need to consider? First is measure based on the similar risk characteristics, which we have already discussed. Keep doing ongoing evaluation of the shared risk characteristics and pool composition. So this is, like the real time you need to keep an eye. If at any point of time you get to know that any of your customer is become a bankrupt, then any amount given to him or her is being more than probable that you may not be able to collect in full. So this assessment you should keep an eye on a real-time basis also. Individual measurement only if there is no shared risk characteristics and probability weighted outcome to no explicit is required. These are all things you need to keep in mind. Second important thing is time value of money. So here in the expected credit loss method, you have seen the time value of money play a significant role. because the future expected cash flow you need to discount to the present value and compare with the book value to reach at expected credit value method. So most important method is discounted cash flow method. How do you use discounted cash flow method? Based on the present value. How do you calculate the present value? By using time value of money or discounted rate, right? So expected credit loss are discounted by effective interest rate when discounted cash flow method is used. Second point here is FASB acknowledged that the time value of money is implicitly incorporated in other credit loss methodology through the use of amortization cost information. So time value of money you always should be considered. Third is collectibility of assets, of financial assets. First is assessing the collectibility of the contractual cash flow on the financial assets over its contractual term. Second is consider the past events, current options, and reasonable supportable forecast. So whenever you are making an estimation for expected credit loss, the collectibility is also need to be given an appropriate weightage. If the person do not have money to pay, then how do you recover it? If person is already a bankrupt, then it's significant risk for you about the collectibility. And second also, if the person do not have intention to pay, right? There are two things you need to consider in mind. One is intent to pay. Second is ability to pay. If the person has ability to pay but do not have intent to pay, then also your money is on risk. And if person has intent to pay but do not have ability to pay, then also your money is on risk. And if person neither have intent nor have ability to pay, then it's on complete risk, right? So you need to assess those qualitative factors also. And these all factors help you increasing the reliance on the judgment which you make for the expected credit loss. So these all are consideration when you are measuring the expected credit loss, right? Any doubt?
No, sir.
Okay, so measurement approaches. Discounted cash flow approach. Discounted cash flow approach, as we all know, they use time value of money. They do calculation of the present value. Projected future principal and interest cash flow discounted at the financial asset effective interest rate. What is effective interest rate? The rate of return implicit in the financial asset. If it is specifically mentioned in the financial asset, then we consider that. The contractual interest rate adjusted for any net deferred fee or cost premium discounted and discount existing at the obligation or acquisition of financial assets. So most of the time it is being implicitly mentioned in the asset, mentioned in the contract. If it is not mentioned, then your effective interest rate is your average interest rate on your borrowing. Other approach, other than discounted cash flow approach, the allowance for expected credit loss shall reflect the expected credit loss of the amortization cost basis as of the reporting date, and then met separate measure of the current expected loss on the following component. First is unpaid principal balance, if any, or any premium or discount, foreign exchange or fair value hedge accounting adjustment. So you need to bifurcate how much is the principal due and how much is being on account of interest, change in currency, or fair value hedge. That you need to separately measure and disclose. Right? Now coming to the presentation part of loan at amortized cost. Loan at amortized cost means your book value, right? So book value before any adjustment would include your principal, would include your premium or discount, would include your deferred loan fees, and would also include your accrued interest or other adjustment. If you see all these things, 1, 2, 3, 4, this is being considered the value of the loan before any adjustment. Then you will be reducing the allowance for expected credit loss from the individual line item. And then remaining principal, premium, discount, deferred loan fee, accrued interest or other adjustment need to be disclosed on a net basis in your financial statement. So regardless of the method, the allowance must consider not only principal, but rather all the comprise of the amortized cost basis. So you need to make the adjustment of expected credit loss not only to the principal, but to the other item also. So other item include your premium, discount, deferred loan fee, accrued interest, or any other adjustment. Make sense? Yes, no. Yes, no.
Yes, sir.
Yes, Prashant.
यस सर.
बोर तो नहीं हो रहे?
ना सर, बोर होके क्या करेंगे.
Cool. Okay. Next one is judgmental area. What are the areas required judgment of management? First thing is methodology. Which methodology you should use? Like methodology means methods. What all methods are there? Discounted cash flow, loss rate method, roll rate method, PD/LGD, or aging method. So this is your estimate, right? And this is your judgment, which method you feel is more appropriate for your organization, right? Are you guys with me?
Yes, sir.
Second thing is reasonable and supportable forecast. So to estimate the supporting document which you have is reasonable or not, that is also again a management judgment. What is reasonable and supportable and how long it is reasonable and supportable is also the management judgment. Third is revert to historical loss, immediate or on straight line basis. So how much the losses you have incurred and how much impact of those historical experience you need to give to the current evaluation. That is also your judgment. Last one is determination of historical losses, which is adjustment of asset specific attribute but not to the current or future condition is also a management judgment. So all these things come under the management judgment. Why I am categorically defining this management judgment? Because you will see a lot of questions in which they will ask you out of this which option is management judgment. And in your practical experience also, in the disclosure part, you need to specifically and separately disclose the management judgments for ASC 326 disclosure part. Next is measurement consideration of financial assets secured by collateral. What is collateral? What do you mean by collateral?
सर जब लोन इन हिंदी गिरवी जो रखवा रहे होते हैं बेसिकली जब
yes, yes. Collateral is underlying asset which you have provided for loan or for any financial benefit you are taking, right? For example, you have taken a home loan, so you have given the home properties to the bank as a security. So those home property documents are collateral assets in the end of bank. So here you need to keep in mind nature of collateral, potential change in the value of collateral, and historical loss information. So these three things you need to keep in mind when you are measuring the expected credit loss when foreclosing the probable. So first is if you are selling the collateral, sale of collateral allowance is equal to amortization cost basis minus fair value of the collateral minus estimated cost to sell. So that is the sale of collateral allowance. The other thing is operation of collateral allowance is equal to amortization cost basis minus fair value of the contractual calculated at the present value of the expected cash flow from the operation of the collateral. So, for example, someone need, let's assume, $500,000, and he has given you an office space which you can use it, right? And that office space you have given to some third party on rent, and you are earning the rental income on that office space. So here in this case of scenario, this is called operation of collateral allowance, right? Here, how do you calculate and measure the expected credit loss for that particular value? In that case of scenario, you need to consider what is the amortized base of asset minus the fair value of the collateral, which is being calculated based on expected cash flow from the operation which you are received, right? Or the second thing is that home loan you have given, and you have taken the home, you can say, papers as a collateral. So in that case of scenario, if you are selling that home, then how much money you are recovering minus the sales cost you are incurring to make actual sales, minus the value of the loan you have provided. The difference amount is the sale of collateral allowance, right? Very simple.
Sir, what do you mean by foreclosure is possible? ये नहीं समझ आया मुझे.
Which point?
Sir, जो orange में है, measuring expected.
So measuring the expected credit loss when foreclosure is probable. So foreclosure is probable. When foreclosure is probable, that for example, you have taken a home loan from XYZ bank, and now you are in default, right? And then now bank wants to sell that property, which is the mortgage or collateral property, to foreclose the loan because you are not paying it. So in that case of scenario, the bank will be having another line item called sale of collateral allowance. So sale of collateral allowance will come only in the case when the sales value net of the expenses is more than the book value of the loan.
Okay. तो सर जब बैंक को कोलैटरल मिलता है, is that also accounted for? मतलब बुक्स में किसी तरीके से शो करेंगे?
No, it will come into the notes. It will come in the notes of the bank. So if you see, like here also in the GM financial statement, oh, I think I'm writing spelling mistake. COLLATE, right? So if you see here, cash and cash equivalent and restricted cash. So how much collateral they have given. So that is something they need to disclose. So here, if you see, the GM financial review is the ongoing credit quality and retail finance receivable on a consumer payment activity. A retail account is considered de-linked, and if substantial portion of the schedule has not been paid, the retail finance receivable are collateralized by the vehicle title. Like this is GM financial, right? GM financial give the loans based on the vehicle. So vehicles are collateral to them.
Okay.
Got it? So in that case, collateralized by the vehicle and subject to local law, GM Financial generally right to repossess the vehicle in the event of customer default on the payment terms of the contract. The accrual finance charge income has been suspended and delink the retail finance receivable with the collateral amount due of $714 million and $875 million on December 20 and December 19. That's how you need to give the disclosure.
Okay, sir.
Very, very good point. Everyone comfortable how we need to give disclosure? Ulak, Rahul, Subtopic?
Yes, sir.
Yes, sir.
Okay, so coming back to our notes. Financial assets secured by collateral, maintenance provision. So when you have financial assets against which you have security, like this GM Financial, they have vehicle as a security, right? So let's understand how we need to do the calculation. First is you need to look at, is the financial asset secured by collateral maintenance provision? If answer is yes, then second thing you need to evaluate, is the borrower required and reasonably expected to continue replenish the amount of collateral. So whether the borrower is continues to pay back the amount or not. If the answer is yes, third thing you need to evaluate, is the collateral amount at the reporting date is greater than the amortized cost. What does it mean? What does this third statement mean? Collateral amount.
Collateral
The
value is
vehicle,
greater.
the vehicle which is on collateral, is the value of the vehicle is more than the book value of the loan given. If the answer is yes, then recognize zero credit loss because you already have collateral more than the value of loan given. If the answer is no, then apply the journal current expected credit loss model to the excess of amortized cost over the fair value of the collateral and limit the credit loss to the excess of amortized cost over the fair value. So if you have assets more than the value of loan given, then no credit loss is required. If the assets value is less than the loan given, then you need to apply the normal method which we have studied about. Make sense?
Yes,
सर
sir.
जो फर्स्ट वाला था,
हाँ,
अगर यहीं पे yes से is the borrower required and reasonably expected, अगर यही no हो जाता है,
we are coming to that. We are coming to that. First, second, third, fifth, and sixth. All these points are okay
sir,
before
okay.
we jump to the no one. So first point is says, is financial assets secured by collateral maintenance provision? If the response is no, then practical expedient does not apply and journal CECL model will apply. That means you do not have sufficient collateral assets. For that, you need to apply CECL model, right? If the borrower is required and reasonably expected to continue replenish the amount of collateral, that means he continue is in a position or is enforced to add more and more collateral, then we need to evaluate the value of collateral. If not, then you need to apply CECL model. Make sense, Ayush?
Yes sir, done.
Everyone comfortable? Okay, next thing is write-offs and recovery. Like when you are doing the calculation of current expected credit loss method, right? So you'll be creating the provision for that. And out of those provision, there might be certain actual loss. For that, you might be doing write-off. Like same way how you do provision for doubtful debt. And then after, if there is any actual bad debts, then you write it off those bad debts. But in some time in future, you may recover those bad debts also. How do you account for? Same accounting is for expected credit losses also being applicable. So if we open an Excel sheet, so for example, if you have, let's say, account receivable of, let's assume, $1 million. How much is the account receivable? $1 million. And you have estimated provision of doubtful debt. Opening balance, you have, let's assume, $50,000, and closing, you have, let's assume, $70,000, right? And Bad debts. During the year, let's assume $60,000. Right? And you have these information let's given to you. So how do you account for? How do you see all this information in account? Do you know like how to make T account? Do you remember the T account?
Yes, sir. किसका
हाँ,
डेटर का बनाना है?
हाँ, let's assume this is debit side, this is credit side.
तूने क्या
हम्म,
डेटर का बना रहे हो ना सर? ओके, तो भी अपन ओपनिंग क्लोजिंग लिख देंगे. ओपनिंग वुड बी
बुक्स में तो ग्रॉस पे आएगा ना, नेट पे थोड़ी है.
ग्रॉस पे आएगा.
मतलब
So what is your opening account receivable? Opening debit or credit?
Debit 1 lakh.
Debit.
1 lakh.
So this account receivable is opening or closing?
तो सर अगर कुछ ना मेंशन किया हो तो भी assume कि closing ही होगा.
So let's assume this is your closing. Closing is debit or credit?
Credit.
So this is your closing balance. What is your opening balance? We don't know. Or maybe let's make a provision for doubtful debt account. Leave it.
Yes. वो better है उसमें.
For that we have
clear
better
ज़्यादा हो
information.
जाएगा.
Yeah. So for DD, opening balance is 50,000. So
Yes,
that will
sir.
come here. Closing
70.
balance is 70. And how much is actual bad debts? Where does it go? Debit or huh?
Debit
Debit or credit?
हो जाएगा.
Debit हो जाएगा.
provision. Yes, sir.
हाँ हाँ डेबिट होगा.
So how much is the expense for the year?
Sir, plus 130
80,000.
minus 50.
80,000.
हो गया.
Right? This is your expense. What do you call provision for doubtful debt?
यस सर.
Yes, sir.
ये पीएनएल में चला जाएगा.
Right?
ये पीएम जाएगा. अच्छा ये एक्सपेंस पर हो गया. ठीक है. Yes, right.
Are you with me?
यस सर.
So what will be like journal entries for this? For this provision for doubtful debt.
So provision for doubtful debt debit. Sorry.
पीएनएल डेबिट टू
provision for doubtful debt. उसका provision है credit पे चला जाएगा.
हाँ?
पीएनएल टू प्रोविजन फॉर डाउटफुल डेट जब क्रिएट करा होगा उस टाइम पे वो हुआ होगा. नहीं ऑलरेडी जब प्रोविजन क्रिएट कर रहा है तो इट वुड हैव बीन क्रेडिटेड.
हाँ तो प्रोविजन को क्रेडिट ही तो कर रहा हूँ, पीएनएल डेबिट कर रहा हूँ.
ये तो राइटिंग ऑफ पीएनएल
क्या करेंगे?
तो ये डेबिट है एक्चुअली. सर आप इसकी अब पूछ रहे हो ना, ये प्रोविजन फॉर डाउटफुल डेट जो एक्सपेंसेस 80,000 आ रहा है इसकी एंट्री ना. हाँ तो इसकी इनिशियली क्रिएट हुआ होगा तो क्रिएट हुआ होगा तब ये हुआ होगा क्रेडिट, तो अब ये डेबिट हो जाएगा ना. करेक्ट. तो अकाउंट रिसीवेबल.
Is this right?
Yes sir, it is right.
But you are estimating something else. Is this right? Provision for doubtful debt, expense account debit to account receivable. Is it right to say it will hit account receivable?
यस सर, इट विल हिट अकाउंट रिसीवेबल ना, क्योंकि हमने अकाउंट रिसीवेबल को कम करके प्रोविजन क्रिएट कर दिया उसके अगेंस्ट, क्योंकि अकाउंट रिसीवेबल के अगेंस्ट ही तो बना रहे हैं ना प्रोविजन की, भाई हमें इतना पैसा नहीं मिलेगा तो उसके अगेंस्ट हम डेबिट कर रहे हैं।
बट सर एआर तो ग्रॉस बेसिस पे आता है ना, कोई प्रोविजन से
हाँ
नेट ऑफ थोड़ी करते हैं उसको अकाउंट
हाँ,
में
प्रोविजन से
बैलेंस
नेट ऑफ तो नहीं होगा। हाँ,
हाँ
तो अकाउंट रिसीवेबल क्रेडिट तो नहीं होना चाहिए सर वैसे, आई थिंक।
Who all have studied
It
11th
should be
standard in commerce?
P&L to provision for doubtful debts.
Do you know provision for doubtful debt is a contra asset? Have you heard this term before? Provision for doubtful debt is a contra asset. What is a contra asset?
सर ये तो याद नहीं।
From
Go back to your 11th standard where you started
like
the
from
journal entry. Yes, yes. Rahul, you are saying something?
नहीं सर, गलत हो जाएगा।
What is contra asset? Have you heard this term before? What is contra asset?
Those values जिनका एसिड रिड्यूसिंग इफेक्ट होता है, उल्टा होता है एसिड के।
So what are the example of contra assets?
प्रोविजन ही हो गया, और सारे प्रोविजंस जो एसेट के अगेंस्ट बन रहे हैं, बैड डेट का, और कौन सा बनता है, ग्रेचुइटी का, वो liability के against
No,
बन
no.
रहा है।
Gratuity comes in liability.
हाँ वही मैं कह रहा हूँ, वो लायबिलिटी हो गया। और कौन सा?
सर करना क्या है इसमें, मतलब मैं ये नहीं समझ पा
No,
रहा।
I'm just testing your accounting. करना क्या है वो तो that will come, but you know, like basic concept, are you okay or not? I'm just evaluating.
सर मुझे तो ऑनेस्टली एंट्री ठीक लग रही है, क्योंकि मेरे को तो यही समझ आ रहा है, आप प्रोविजन क्रिएट करोगे तो कुछ तो कम करोगे उसके अगेंस्ट, डुअल इफेक्ट तो आएगा।
What we
प्रोविजन
should
आप
reduce? Do we create a provision? So shall we write provision, or shall we write account receivable?
सर अकाउंट रिसीवेबल होगा, प्रोविजन कैसे हो जाएगा, मतलब प्रोविजन क्रेडिट पे कैसे, क्योंकि ये हमारा खर्चे का प्रोविजन है।
Provisions are always credit.
क्रेडिट ही होते हैं
Liabilities are
बट
always credit.
राइट, तो प्रोविजन की एंट्री हमेशा बैड डेट्स के अगेंस्ट सेट ऑफ होती है ना, मतलब जो एक्चुअल हो गया उसको प्रोविजन के अगेंस्ट करा हमने।
सर ये तो जो आप कर रहे हो, प्रोविजन को जो 80,000 डेबिट करा है, ये तो तब होगा जब बैड डेट इसके अगेंस्ट सेट ऑफ हो रहे होंगे, बैड डेट को क्रेडिट करेंगे, प्रोविजन फॉर डाउटफुल डेट टू बैड डेट्स। बट प्रोविजन जब क्रिएट कर रहे हैं तो पीएनएल टू प्रोविजन फॉर डाउटफुल डेट होगा।
लेकिन हम तो इसी की बात कर रहे हैं ना कि अब राइट ऑफ ही करना है हमें, तो हाँ, तो इसको वो उस पे कर देंगे ना, बैड डेट से राइट ऑफ हो जाएगा ना, ये बैड डेट से राइट ऑफ हो जाएगा तो बैड डेट कैसे हो जाएगा?
I'm not
पर
sure from
पर
which
ये
school
राइट
we
ऑफ
are.
ये राइट ऑफ थोड़ी कर रहे हैं अपन, ये मतलब
We are creating a
फॉर द
provision
ईयर,
for doubtful debt.
यस, फॉर द करंट
पीएनएल
ईयर।
की प्रोविजन होगा फिर तो सर, बहुत क्लियर है फिर तो, अगर प्रोविजन कोई भी क्रिएट होता है तो पीएनएल से ही एंट्री होगी, पीएनएल डेबिट होगा और
हाँ,
प्रोविजन क्रिएट हो जाएगा, वो चला जाएगा।
तो P&L सर, इट विल बी लाइक बैड डेट्स डेबिट टू प्रोविजन फॉर डाउटफुल डेट्स, क्या आएगा?
नहीं नहीं सर, पीएनएल डेबिट टू प्रोविजन फॉर डाउटफुल डेट्स,
What is
80,000 रुपीस।
PNL? What is PNL? Ayush.
P&L में we will debit, we will use the bad debts.
What is PNL? PNL is an account. Like कोई account होता है PNL के नाम से?
नहीं नहीं,
Ayush.
बट सर खर्चा जब मतलब करते हैं
So one side is expense, so other side is provision.
ट्रांसफर करते हैं, करेक्ट, ट्रांसफर करते हैं ना उसको।
So this automatically is a PNL because it's an expense.
अच्छा, टू प्रोविजन हो जाएगा, ओके
ओके।
Just go back to the 11th standard and reread the journal entries. That's basic of an accountant, basic for an accountant.
सर मैं तो उसको पीएनएल टू प्रोविजन कर
वही
देता
बोलते
हूँ।
रहते हैं बार बार ना, वो किस अकाउंट देगा, मतलब वो सेंस वो है, ठीक है, आई गो गेट योर पॉइंट इसमें।
So, like when you make provision, have you ever made provision for doubtful debt entry, journal entry? Have you ever made in books or not?
प्रैक्टिकली तो नहीं करा
नहीं
सर।
करा प्रैक्टिकली तो मतलब
Theoretically in school?
हाँ, वो 11th में करा।
स्कूल में किया था हाँ।
That's what I'm saying. Go back to the 11th standard. यार मुझे अब 11th पढ़ाना पड़ेगा क्या?
थोड़ा तो बता दो, हम समझ जाएंगे जल्दी, कैप्चर इट।
So it should be expense account debit to provision for doubtful debt. And provision for doubtful debt is a contra asset. So contra asset mean in the balance sheet in account receivable minus provision for doubtful debt, net account receivable come. Shall I show you?
सर बैलेंस शीट में प्रोविजन फॉर डाउटफुल डेट लायबिलिटी साइड पे अलग से शो होता है ना, अकाउंट्स रिसीवेबल तो ग्रॉस शो होते हैं।
Say that again.
आई वाज सेइंग कि बैलेंस शीट में अकाउंट्स रिसीवेबल हमेशा ग्रॉस शो होंगे और प्रोविजन फॉर डाउटफुल डेट लायबिलिटी साइड पे नेट में शो, वो अलग वैल्यू आएगी उसकी। वो
That is the
एसेट में से
reason.
सेट ऑफ
No,
थोड़ी।
that is the reason it's a contra asset. It's not a liability. Provision for doubtful debt is a contra asset account.
ओके।
So if you see account receivable and not receivable, primarily consists of the amount that are due and payable from our customer for the sale of this. We evaluate collectability of the receivable each reporting period, record an allowance for doubtful account to present that net amount expected to be collected in our receivable. Can you see
Okay.
this?
Yes, sir. Yes, sir.
This is what I was saying. Addition to the allowance are charged to the bad debt expense reported in the automotive and other selling and general expenses and were insignificant in this year. So it hence separately not disclosed. Make sense
Okay.
what I was saying?
Yes, sir.
So this is a contra asset actually. So if you see, if you have like in school days, if you remember your account receivable is, for example, $1 million. Then you have less provision for doubtful debt. Let's assume you have how much? 70,000. So you might have always seen your balance which is coming out is equal to sum of these two. Do you remember this way you were showing in your school days?
Yes, sir.
Something like this.
Yes, sir.
Everyone agree? Rahul, Santrupti?
Yes, sir.
Right? So this is what it means. First thing is you have created a provision for doubtful debt. Now, second thing is you have actual bad debts. What is the difference between provision for doubtful debt and actual bad debts?
Sir,
Now you have actual bad debt of 60,000. What will be the?
Sorry. Continue.
Bolo, bolo. What is the difference?
डिफरेंस वुड बी कि आपने ईयर एंड पे जब 31 मार्च है तब आपने एक प्रोविजन बनाया कि इतना एक्सपेक्टेड है कि हमें रिसीवेबल्स नहीं होगा, दैट इज द प्रोविजन। जब वो एक्चुअली
Sorry, Santrupti, you are saying something? She has unmuted, but Santrupti, you are saying something? No, Ayush, yeah, you can continue.
Yes, sir. तो हमने प्रोविजन बनाया 31st मार्च को, बट basis whatever past estimation or whatever the percentages we are applying, and then when we move to next year, when that bad debt actually happens, that was just an provision is an expectation. Bad debts actually, when they happen, that is the actual bad debts which we set off from the, मतलब हर actual
So
loss के लिए जो हमें
what
हो
will
सकता
be,
है एक
yeah,
provision
what
लेके
will be
चलना.
the journal entry for bad debts?
So bad debts के लिए जो entry होगी, that will be bad debts debit, no, provision for doubtful debts, no, provision for doubtful debts debit. So provision for doubtful debts would be debit
Debited.
to bad debts. Then finally we'll move the bad debts to record in the P&L. Like
Yeah.
Right, something like this.
Yes,
Yes,
sir.
sir.
Correct.
How much is it? 60,000. So what will it result? It will reduce your provision.
Yes, sir.
Correct.
It will reduce your actual provision, right? So now let's assume in year 2 you have recovered. Let's assume 30,000 out of these bad debts. So what will be the journal entry you will be making? Cash account debit? Yes or no?
Yes, sir.
Correct. Cash
Yes.
account debit.
To AR.
Recovery of bad debts?
Bad
Bad.
debt.
So it will be your income,
Yes, sir.
right? So everyone agree? Rahul, Prashant, Santrupti?
Provision
Everyone agree?
प्रोविजन भी करते हैं ना हम इस केस में, जो मतलब कभी कभी मैंने जो देखा है, मतलब आई एम नॉट श्योर, आई एम आस्किंग दिस, जो हमने प्रोविजन क्रिएट करा हुआ है, ठीक है, हमने सपोज 100 रुपीज का प्रोविजन क्रिएट करा था, उसमें से हमने बैड डेट्स राइट ऑफ कर दिया 70 का, बैड डेट हो गया तो वो उसके अगेंस्ट खत्म हुआ, जो हमने सेकंड एंट्री पास, और हमें फिर 30 का बच गया, ठीक है, कि मतलब यार जब रिकवरी हो गई उससे ज्यादा अमाउंट की, तो हम उसको प्रोविजन में ही ले जाके नहीं कर देंगे, प्रोविजन जो हमने ऑलरेडी खड़ा हुआ है 30 रुपए का प्रोविजन हमारा बच गया, उस प्रोविजन में जाके उसमें ही रिकॉर्ड नहीं कर देंगे ये जो रिकवरी हुई है.
No. If you see in this example, you have created a provision of 80,000.
Right.
Out of that, 60,000 is actual bad debts. So you have reduced the provision. So
Correct.
now, out of this 80,000, your provision balance remain 20,000.
Right.
Right? And from this 60,000, which you have booked the permanent loss, and out of this 60,000, you have recovered 30,000. So when you have booked the actual losses, at that point of time, you have booked it expense, right? So now you are recovering that expense. So it should come into your income part. So this recovery of bad debts will come into your income part, other income category.
तो ये एंड में एंट्री होगी रिकवरी ऑफ बैड डेट डेबिट टू P&L.
No, cash account debit. You are receiving cash.
इसकी सब्सिक्वेंट एंट्री आई वाज थिंकिंग.
तो मतलब P&L में हर कुछ ही ट्रांसफर होता है.
No, recovery of bad debts is being P&L account. Recovery of bad debt is a P&L account. Cash is your asset account.
ठीक है.
So what your terminology you are using is not right, because this recovery of bad debt account, have you seen chart of accounts?
Yes, sir.
Right. So in the chart of account, if you see recovery of bad debt, that will be tagged to the other income. And other income will automatically show in the profit and loss accounts.
Got your point now. वही कंफ्यूजन हो रहा था. मैं बार-बार उस P&L में डेबिट और उसको ट्रांसफर करने की एंट्री में बोले जा रहा हूँ बार-बार,
Because it's automatically go there.
हाँ, क्योंकि उसका बैलेंस जब आपने ये एंट्री रिकॉर्ड करी, कैश डेबिट टू रिकवरी ऑफ बैड डेट, तो दिस इज अ P&L अकाउंट, तो ये ऑब्वियस है कि वो
P&L
टैग ही
hit
वहीं पे है, तो
करेगा।
पीएनएल में ही रिफ्लेक्ट हो जाएगा. इट हैज अ
Yes.
क्रेडिट बैलेंस. राइट.
And this is asset account. This is your liability account, and this is your account.
सर तो फिर जो अकाउंट रिसीवेबल में जो बैलेंस रहेगा तो वो मतलब रिड्यूस नहीं करेंगे बाय थर्ड एंट्री कि कैश टू अकाउंट रिसीवेबल?
No, no, no. वो तो already हो गया ना. So that's already adjusted here.
ओके, यस यस,
That's
ओके,
already adjusted here.
यस यस यस.
So now coming back to the notes. Why we have gone to the accounting to understand this
ये
concept.
सर पहले ये अकाउंट बनाते थे ना, तो
हाँ?
उसमें क्या करते थे, जैसे अब एक साइड का रहेगा तो उसमें ट्रांसफर लिख देते थे टू पीएनएल. वो प्रैक्टिकल वो वैसे नहीं होता है एक्चुअली. वो कंफ्यूजन वो हो रहा है बार बार. बहुत जगह जो मुझे याद आ रहा है ना, हम करते ट्रांसफर टू पीएनएल डेबिट, पीएनएल क्रेडिट ऐसे लिख देते थे वो अकाउंट का नाम लिखने की जगह. तो वो दैट इज द थिंग जो कंफ्यूज कर रही थी मुझे अभी भी. मतलब अब तो क्लियर है मुझे, बट
हाँ.
वैसे आपने वो जो चार्ट ऑफ अकाउंट्स का एग्जांपल दिया कि डायरेक्ट टैग होता है, देन आई अंडरस्टूड कि
Yes, yes. Got it. So now let's understand what is write-off. A write-off should be recorded when entity conclude that all or portion of the financial asset is no longer collectible, right? Then we do the write-offs. Otherwise, we keep on hanging on the provision part. So we actual write it off when we are expecting not to collect, right? And the deduction of the write-off is from the allowance. Allowance means provisions which you have created earlier. So clear on the write-off side? Yes, no?
yes.
Yes, sir.
Now coming to the third entry, which we have discussed, recovery part. Recovery, when entity receive consideration in satisfaction of some or all of the amount which is previously written off. The recovery may be recognized either increasing the allowance for expected credit loss or earning directly. So generally in the practical expedient, it is being considered in the earning, which we have discussed. Make sense?
Yes, sir.
Other topic is interest income, foreign currency consideration, and other consideration for ASC 326. Interest income, we all know amortization cost multiplied by the effective interest rate is your interest income. What is effective interest rate? That also we have discussed. Effective interest rate is a contractual interest rate adjusted to any net of deferred fee, cost of premium or discount at the origination, or consider the impact of any prepayment. So prepayment will reduce from the amortized cost. Second thing is foreign currency consideration. Foreign currency consideration, for this also we have discussed an example like 80 rupees per dollar to 120 rupees per dollar example, if you keep in mind. So change in currency exchange rate impact the functional currency cash flow. You know what is functional currency?
Yes, sir.
What is functional currency?
Functional currency is basically जिस भी economy में the company is operating, वहाँ पे जो भी currency the company is using for its day-to-day transactions, that is functional currency.
Anyone else would like to add or share your thought? What is functional currency? You know, I was auditing a company and we have changed the functional currency of that company. That was my observation.
Okay.
Can you imagine like how drastically their overall financial statement would have been changed?
राइट. फंक्शनल करेंसी चेंज होगी तो आपका सब कुछ ही चेंज ही हो जाएगा.
Yeah, so in 2016, I was auditing a company in Africa, right?
Okay.
And they were like Functional currency is the currency in which more than 50% of the transaction of the company is happening, right? So they were using local currency as a naira,
Okay.
as their functional currency, but all of their business are in USD.
Okay.
So we have changed their functional currency from naira to USD. And it
USD.
has totally changed their financial statement.
हो ही जाएगा सर, एडजस्टमेंट्स ही हो जाएंगी बहुत सारी इसकी वजह से तो.
So it took 6 months for them to reevaluate their financial statement.
खर्चा सर फीस बढ़ गई होगी सर.
Fees though, yes, we got like almost double the fees.
चेंज करा दिए तो.
Same way, like back in 2013, I was auditing this company Loyalty Reward, for which like we were discussing example in 606, right? So they were using like the cash basis revenue recognition standard. You know, when I came, we were like in EY in 2013 was the first time auditor, and luckily I was I was leading that project. And then when I did the evaluation of revenue recognition as per IFRS 15, the whole dynamics has changed. It took like 3 months to them to reevaluate their entire financial statement and revenue recognition. And we got like double the fees.
प्रमोशन भी ड्यू होगा सर आपका पक्का से.
Yes. Many complexity I have seen, you know, like I have been cleared 3 times PCOB inspection and all the time with the gold standard.
बताया था सर ये आपने जब हम लोग
So that motivated me to be what I am. मुझे लगता था वो increment or promotion is not sufficient. I can do better than that. So that's how I jumped into business. Okay, so other consideration are like account receivable, which we have discussed in 606, lease receivable, 842, guarantees as per ASC 460, off balance sheet commitment that we'll be discussing here also. Now coming to off balance sheet items. So unfunded commitment, which are not unconditionally cancelable, and unfunded commitment which can be unconditionally cancelable. So are 2 categories. So unfunded commitment which are not unconditionally cancelable. That means there are certain condition attached. If you want to cancel it, then there might be a possibility of certain liabilities. So there are 2 categories of commitment. One is commercial commitment, or second is consumer lending commitment. So commercial commitment, for example, you have a construction contract. There you have certain commercial commitment that you will be finishing of this project in certain time. Otherwise, you will be paying some financial penalties, right? Consumer lending, for example, construction of permanent residential for a real estate. So that's small thing. But here there are 2 things. One is drawn portion, second is undrawn portion. What is drawn portion of the unfunded commitment which are not conditionally cancelable? So then we need to recognize the allowance for expected loss over the remaining contractual life of asset, reduced for any expected prepayment. If the commitment which are not unconditionally cancelable, and you have drawn certain limit or drawn certain amount or drawn certain percentage, then you need to account for and recognize the loss. And that recognized loss should be on the balance payment, not on the prepayment, right? Similar approach to recognize the loss on other scope in asset type, which we have discussed earlier. But if there is any undrawn portion which is not specifically mentioned in the agreement, then expected credit loss are recorded as a liability, since there is no asset recognized on the books for the commitment. Assess the loss allowance only on the portion representing the amount at expected additional drawn. Last one is assessment continue over the length of the period in which the entity is contractually obligated to extended credit. So again, coming back, like it may seems like new things to you. Simple. If you have any commitment given on any particular item, which is like underlying asset you have. Underlying asset, if you have, then you make an adjustment to that underlying asset that comes under the drawn portion. If there is no underlying asset, but you have given certain commercial commitment, in that case of scenario, no adjustment to the underlying asset because there is no underlying asset, but you need to calculate if any provision is being required, then book the loss. So that is the difference between drawn and undrawn portion. Drawn portion is on underlying asset. If there is no underlying asset, then it comes only undrawn portion. Undrawn portion, only if there is a liability in future, then you need to book that in advance. In a very simple and layman language, if I say. Make sense? And this is for not unconditional cancelable. If it is unconditional cancelable, that means the person to whom you have committed is not liable for anything and he or she can cancel at any point of time, then undrawn portion, no credit loss is required, and to the drawn portion is similar activity you need to do, which is for not conditional cancelable. Make sense? Any doubt here?
एग्जाम्पल के साथ अगर हो पाए तो बेटर है.
Yeah, so example के साथ, yes. For example, ABC Limited of US has a subsidiary XYZ Limited in India. And in India, XYZ is a new company. Like for example, you are saying Ring Central, right? So let's assume Ring Central. Let's take an example of Ring Central. Ring Central in US is a big company, right? They have opened a subsidiary in India, Ring Central Private Limited, right? That's a new company in India. Now banks are not giving any loan to them, right? So if Ring Central India need any loan, then they need the backing support from the US company as a guarantee letter.
Okay.
Yes or no?
Yes, sir.
Then only the Indian banks will provide loan to the Ring Central India. That's what like practical experience is. Here, the US company Ring Central has given an undertaking and guarantee that if Ring Central in India default in making any payment, then we will reimburse you. So in that case of scenario, it is undrawn portion. That means actual amount is not going to Ring Central US.
Right.
But it is coming to Ring Central India. But still, Ring Central US is liable if Ring Central India default.
Okay.
So in that case of scenario, if Ring Central cannot withdraw from this condition, right, then they need to make a provision if they are expect any loss coming in.
Okay.
But if they can withdraw
They will not
without any condition, then no credit loss required to be booked.
Okay. Okay.
Right?
Okay.
Everyone comfortable? Prashant, Santrupti, Rahul?
Yes, sir.
Yes, sir.
Okay. So this is expected credit loss models we have discussed. Maybe we can take a halt over here, and another topics we'll cover in next class. Otherwise, it will be overwhelming for you guys.
ये सर ये थोड़ा लास्ट वाले टॉपिक्स में थोड़ा सा एक बार रीड करना पड़ेगा, थोड़ा सा क्लैरिटी जिससे.
No problem. I'll make the notes tomorrow and send it to you, or maybe tonight I'll try.
Okay, sir.
Okay.
Okay.
Cool. Enjoy rest of your Sunday, and let's meet on Saturday 10 a.m.